In today's Money Watch, we're talking about how to prepare for a potential recession. With inflation at a 40-year high, many experts warn of a possible economic slowdown. In a new poll, 42% of Americans say they are struggling to remain where they are financially. That is the highest percentage we have seen in the past 5 years. Only 9% say their financial situation is improving. CBS News business analyst Jill Schlesinger joins us now. Jill, good morning.
Good morning.
So, interesting. The Fed's raised interest rates, jobs, companies are adding jobs, and yet we say that we're heading towards a recession. Are we headed towards a recession?
I think the likelihood is really increasing, and it's the combination of those 4-decade highs in inflation, because then all of a sudden businesses and consumers start shifting their behavior some. They're going to pull back, and also the higher interest rates chasing inflation by the Fed can often lead to the economy slowing down too much. We've talked about this, where we say the Fed goes too fast, they slow things down too much, and boom, we're in a recession. Here's what is clear. Even if we don't go into this classic definition of a recession, things are going to slow down, and we want people to be prepared for that slowdown.
So how should people be prepared?
Well, I think that while things are still pretty good and while the job market remains solid, it's a great time to go back to the basics. And you know I have these boring 3 concepts. Gayle King, I'm looking at you right now.
I didn't use the word boring.
I know. Well, they are, let's just say they're classics.
Yeah.
And the classics are, we want people to have an emergency reserve fund. And this was vitally important during the pandemic. We learned this lesson. And people built their savings up enormously during the pandemic. There was not a lot to spend money on. 6 to 12 months of your living expenses in a safe, boring bank, CD, savings, money market account. And by the way, if you're retired, maybe it's 1 to 2 years of those expenses, so you don't have to dip in. We want people to pay down credit card debt. In a rising interest rate environment, servicing debt costs more. So that's really important. If you've got those 2 things covered, then great. Put some more money into your retirement account. It's a really good time to get into that habit.
And I always say, how do you do this when you're living paycheck to paycheck? I remember back in the day, I would pay the cable bill to the phone company, pay the phone company the electricity, because I figured that would buy me some time. They would think, well, she's trying to pay it, and by the time the check comes back to you, then you think, okay, now I can do it. But how do you do this, Jill, save 6 to 12 months?
Well, I think it is really a lot easier today because we can automate our savings. We can actually say to a bank or a financial institution, take $5 or $10 out, and it's really easy to do. You start small, you go slowly. And you know what? There are also some other big decisions you can make. You could say, hey, I was going to buy something big, and maybe I won't do that right now. Hey, I was going to move out of my parents' house. Maybe I won't do that until I get my reserves built up a little bit. I think it's important for us to try to make these changes while we can.
Where are you on the question of whether people should switch jobs or leave their job if they're not happy at this particular moment?
I am really at this point where I think we have to understand the labor market is shifting. So we now know the first 3 months of the year, 500,000 jobs a month were created. The next 3 months, it was down to 380,000. That means workers still have an advantage. There's 11.3 million open jobs. But before you just go for an extra $1 an hour, I would be very careful. You may have a great boss. You may have flexibility. You may have an ability to actually upskill yourself with some classes that your boss is going to pay for. I think before you just jump to the next job, remember, when the economy rolls over, what often happens is the last person in is the first one to go.
Really quickly, for the sophisticated investor, does this represent a buying opportunity in the stock market?
Well, I would say this. It's a 40-year high in inflation. Prices are up overall. What is the one thing that's down? Stocks and bonds. So if you can afford it, then I think it's a great time to up that contribution into your retirement account.
Afforded is the key thing. Sophisticated, yes. You mean rich.
Exactly.
Well, if you can bear the risk.
I know,
That's what we would say
That's right.
in my old profession.
That's right.
You can bear
Jill, thank you very much. Always a pleasure.